You are listening to ChartingWealth.com for Wednesday, the 30th of March, 2016. Well, we are seeing every index that we look at, including gold, up this day. Interesting that the indexes are up as well as gold. Let's jump right into it. We always start with IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. In other words, it tracks the whole market, and we always start with our two-day chart. Our big chart, the only time we look at a bigger chart is once a week on the weekly review and forecast, and that is the weekly chart. But let's talk about what's happening on the two-day chart. It crossed over going up back on the 16th of February and went up substantially until really the first time that it really moved back on us was on the 21st of March. What happened after that on the two-day chart is we had two down candles on the 23rd and then the 24th, and now the 29th. We see that a new candle has formed, a green upward moving, so we've redrawn our trend lines over the course of the day. The market was up 1.06% in totality. And when we drop back and look at our 4-hour chart, what do we see? We see that the 4-hour chart has not yet crossed over going up, but it is sure trying to do so. It has not happened yet, so we don't have a call for that. We do have the market above the newly redrawn two-day trend line. We did have a number of candles, 3 candles going down starting on the afternoon of the 23rd, the morning of the 23rd, the afternoon of the 23rd, and the morning of the 24th, and then the market slid sideways. It started off in the morning of the 29th as a doji, that is a lot of indecision, and then the market sprang up in the afternoon. We still have a negative derivative oscillator, and we don't have a crossover yet on the 4-hour chart, so we have no entry point at this point. We'll have to see if the kind of up movement that occurred toward the end of the day actually continues. So again, when we look at our big chart, we see that the big chart is still in an uptrend, and we have a correction attempting to form in the short chart. If it does indeed roll over and start moving up in the same direction of the big chart, we'd be looking for an entry point there. So continue to monitor those charts, see if you have an entry point. You don't yet. Now let's talk about the S&P 500 as depicted by SPDR's S&P 500 Trust Series Exchange Traded Fund. That is, again, the symbol is SPY. We've redrawn that trend line also. It is still in an upward trend on the big chart, although the derivative oscillator is losing a lot of its speed. Now, that should be a telltale to you. The derivative oscillator is going to have to heat up and not go negative if we're going to continue to see a strong up movement in that two-day chart. That is typical with the charts. When you continue to see the derivative oscillator losing energy, typically means that you're not going to have much of a run in price. Now, let's look at what's happening on the 4-hour chart. And again, we redrew that today. We are still negative on the 4-hour chart. It's not crossed over going back up. The market was up 0.93%, so not quite 1% over the course of the day. So we'll continue to pay close attention to what's happening in those charts. So again, don't have a repurchase signal at this point. We're looking to see if one does indeed happen. The market had moved above the oscillator bands, what we call the Bollinger Bands. Those are volatility bands, and it closed back down below that. So we'll continue to watch, see what happens. Still in negative on the derivative oscillator, and still in a negative. Don't have a crossover yet on the MACD, the moving average convergence divergence. We're going to range back out to our two-day chart. Going to move on to the Qs. Now the Qs was up more than anything except gold over the course of the day, 1.61%. The Qs is still in a confirmed up move. The derivative oscillator has been losing its energy throughout the course of the day on Tuesday. Again, down move in the morning and then a surge up in the afternoon. Derivative oscillator, again, has continued to lose energy since around the 3rd of March, even though the market's been moving up Again, the derivative oscillator, you can sure study and read about that at our website, chartingwealth.com. Have some good training on that. You can also look it up on Investopedia. We like it. We like to use it in conjunction with our moving average, convergence, divergence, and our signal line. And again, all those are in the green right now on the large chart. That is the 2-day chart. We look at the 4-hour chart. Don't have a crossover yet, but looks like it's trying to move toward it. Closed way outside the Bollinger Band. That is the volatility band, and it's above the newly drawn 2-day trend line. A lot more movement up by the bulls that was pulled down by the bears. So continue to watch. Again, don't have a purchase signal, but might have one soon, particularly on the Qs with all that up movement. So again, watch it. Don't get fooled. Wait for that cross to occur and for it to close before you jump into a virtual trade. Now, let's jump back out to our 2-day chart, and we're going to go to gold. How interesting. Gold is still in a confirmed down move on the 2-day chart. Derivative oscillator is about parallel for where it was on the last 2-day candle on the 24th. So we've redrawn the trend line going down. We have a 2-day candle that started to form. It's basically a doji. It looks like a cross. Means that the bears and the bulls have canceled themselves out, which means typically lots of indecision on what's really happening with gold. Now that again is on the 2-day candle. If we look at what happened over the course of the day on the 4-hour chart, we see gold started moving up in the morning substantially and then surged in the afternoon, busted through the 2-day trend line, has not yet crossed, however, not yet crossed going up. A lot of down movement back in the morning of the 23rd, and that energy has just not been spent yet. That is why we haven't had a crossover yet, and we haven't seen the derivative oscillator flip over. You might say, well, what does that mean when that happens? Well, that means that what we're having is a rollback in the price of gold on that down move, and if gold ends up moving up on the 4-hour chart and then rotates back over going down, that would be a point for you to look at getting into a down move in gold. It could surge up in price and even flip over the 2-day chart. If that happens, well, of course, you would wait for a pullback and then you would wait for a surge back up on the short chart to tell you to get into it in that direction. What we're waiting for right now, since the market's going down, is for the 4-hour chart to pull back, which it's attempting to do right now, and then move back over, crossing back over, going down. That's your purchase end point. If you don't know quite what we're talking about, I encourage you to go to chartingwealth.com, listen to all of our different training videos that we have, and also if you subscribe to our daily chart review, we will send you 2 things. We'll send you the charting layout that we use at freestockcharts.com, absolutely free. We'll also send you the link to our 15-minute How to Read a Stock Chart video, which will be the quick way to get you started. Now, if you appreciate what we do and you join us every day for this, you want to help us out, let me ask you one favor, because we don't charge you for anything we do here. What we're asking you for is go to iTunes, subscribe to our daily podcast, give us a 5-star rating, and say something nice about us. You can also follow us on Instagram, YouTube, Facebook, Twitter, you name it. We are there for you. Thank you so much from chartingwealth.com.